Good evening, everyone. Can you all hear me? Sorry, my this thing was a bit noisy. Can you hear me all?
Yes, I think we can hear you.
Yes, good evening, ma.
Oh,
We can hear you. I can hear you.
all right. So
Yeah, good
Good
evening.
evening,
We
that's
ma'am.
can
We
hear
can
good.
you.
hear you.
Yeah,
All
good
right, that's
evening.
good. Thank you very much. Thank you. All right. So, just like we've seen today, we are going to be having financial management and leadership in the hotel industry, and then we are going to be having our resource person this evening, who is a chartered accountant, fellow. When I say fellow, you understand. So we are going to,
FCA.
he's going to be talking with us today. Thank you, sir. So he's going to be talking with us on financial management. And I believe that this will not just be only applicable to hotels, but if we can also use this, I believe it's going to help us in our other endeavors and other businesses. So whatever you are going to be doing, or when you are managing any so I think the resource person is available. So let me know if he's here. Then so that we can give him the floor to start the class.
Um, I'm here. Good evening. Just give me like five minutes. I will join you back.
Oh, all right. Then that's good, sir. So we are giving him 5 minutes. He's already here. So in this 5 minutes, let me know how many of the project group leaders are in the class now. Is there any of the group leader that is present currently, as in that is currently in the class? Do we have anyone among them? Mr. Samuel, Alice, and who is the third person? Let me get the name. Are they here already? Looks like I'm not seeing any one of them. Okay, actually, this is how the project, I'm going to send some other details information concerning the project. Can you all hear me, please?
Yes, ma. We can hear you.
Yes,
Okay,
ma'am. We can
so,
hear you
all right.
clearly.
So the project is going to be, so the three groups are submitting only 3 projects. So the reason why we are doing it in this way, this is not how we used to do it before. It used to be a personal stuff. But this one, we want to encourage interaction among us so that we don't just meet here after the class and that's all. I believe that somehow we are meeting each other for different reasons that God must have brought us together for. So we'll have these interactions in the 3 different emotions. The leader might assign someone to compile them. Then I'm going to give you the details on how it's going to be, introduction, the method, every so, and after the class this evening, we are going to having, I will drop a link for our exams. It's very simple. Just like we've seen the test, it's just so, it's not something difficult. So once you are done with that, and then you focus on the project, then that is going to form all this assessment we have been doing on the project with the exams. We are going to see all of them on our transcript. The different topics that we are treated and how you performed and all that. So that's the essence of the transcript. Then we'll now have the certificate. All will be sent to our different emails. And this is how we do it. If you miss any test or exams or the project, you are not going to get a transcript. You will get a certificate, but you will not get the transcript. So I will encourage everyone to take part in the project. Don't see it because it's a group project and you are not participating. That is why I'm going to, I think group 2, well done. You guys are doing well. You have created your group. You have started talking. I'm there. Group 1, I've not seen your group. Nobody have sent me link. Group 2, the same, group 3. I'm here to see your group 2. So please, let's try and start work. Group 2, I can see them doing work already. So let's put our heads together and begin to handle this so that we can all, by God's grace, have our certificates on that 14th or on the 15th latest. We can have the certificate, the transcript. Okay, so let me know if somebody have something to say, any question to ask before our resource person will come on board. You can go ahead and ask your question, and everyone is listening so that we can all contribute. So the question is not only to the admin.
Okay. Okay, ma. Good evening, ma.
Yeah, good evening.
Um, Dan Peter by name. Okay, I want to talk about the project. I'm in group 1. You said each group is going to submit 3 projects. Is it going to be by the same topic? We do it in a 3-way?
No, this is what I said. Each group will submit one project, and each group has their different project topic. I don't know if you are getting me.
Yes, I understand now.
So it's going to be a single project submitted. So everybody's name that participated, the names will be on the front page. So I'm going to send the details so that you understand how it is. But each group is submitting one project. So we have 3 different topics, and then probably if is where we all handled in the project, just like a follow-up. So I don't know if you have any other question or if I've answered your question.
All right, ma, thank you. You have answered the question, but I really want to ask if we are going to have another interaction section after the lecture today.
Okay, this is supposed to be the last, but we can actually have one because I would love us to talk about the project. We'll just discuss those topics together so that everybody will get to learn 1 or 2 things from the 3 topics we brought out. Because those topics are things that they are the day-to-day activity and challenges we face in our business. So that's why I brought them out 3 like that. So what we'll just do, we'll just find one evening and then we'll just have an interactive session just to discuss that topic, that just the project, and that's all. We can make it either live on TikTok or on Team. I believe on TikTok we should be able to have everybody. So we can have that discussion together.
That would be great. That would be great. Thank you.
You're welcome. Okay, any other question, please, before our resource person will come on board? No one is talking, no question, no clarification. Everybody is okay, everybody is satisfied, right?
No, I don't have any question for now.
Okay.
But I think someone is raising their hands.
Okay, yeah, I think I can see Jude. Please go ahead. Ask your question, please. Please unmute yourself and ask your question. Is it Anosike Jude? Is it Kenna? Sorry, my screen is not that wide. Please unmute yourself and ask the question. Anosike Jude. Unmute yourself. Hello.
Probably he tapped on it by mistake. I don't think he has a
Yeah,
question.
it's okay.
Okay, ma. I don't know if I should ask something.
Yeah, please go ahead.
Okay, there is a question I asked in the last in our previous section. I think it was a little light was thrown to him. We didn't have much people to contribute. I want to
Okay.
repeat the question again because the moderator that day was okay. The speaker that day was saying that maybe we were going to have a section of interaction where the question will be repeated so that some person will also throw more light on it. And the question was okay. For example, someone that has been in the hospitality management, like maybe you are being there, but you are not a manager. Now, having gone through this training, I've gone through hospitality management and excellence in service, front desk, and now you're going through this hotel management. And then you had the passion to apply as a manager. You have not been a manager before. Now you now apply as a manager. What are your first step? What are the things to do in order to be succeed? Since you don't have the idea of managing, sorry, since you have not managing a hotel before, but since you have now gone through this class, put everything in practice, and now boldly apply to be a manager, what are the first things for you to do in order not to fail and to be a successful person?
Okay. Can you hear me?
I'm
Hello.
hearing you, man. Yeah, I'm with you.
Okay. All right. So I think our resource person is listening. So what we'll do is that we'll allow him hand take the class. Then that question, he will talk on that question.
Okay, no,
You
all right,
understand?
no problem. No problem, man. No
Yes.
problem.
So, but towards the end of the class, we'll bring that up. He has heard the question, but I believe he will attend to it. End of the
Okay.
class. All right. So please, our resource person, I will say you should mute yourself. Mute yourself, sir. Thank you.
Okay. Good evening, everyone.
Okay. Good evening, sir.
Good
Sorry,
evening,
I
sir.
want to share my screen. If you,
Good
sorry,
evening,
sir.
sir.
If you, I want to share my screen. If you can see it, you let me know. Can you see my screen?
Not yet.
No,
Not yet.
not yet.
Not yet.
Okay. Let me see. Not this. Okay. Is what? Can you see my screen?
We can't see it yet.
It's not showing, man.
Oh, okay.
You can't see it.
Let's
You can't see it.
Ah,
Uh,
okay. Mm, sure. Okay, up to now you can't see it. Can you see?
No.
Yeah, we can see
Yes,
it
we
now.
can see now.
Okay, something is coming up
Okay,
now.
so you are seeing our slides, right?
Yes.
Can you see? All right.
Yeah,
So
we can
please,
see
we'll
it
be
now
managing it.
clearly.
All right. So we'll be
Yes,
managing it like this for now.
We can see
Thank
the, yeah,
you.
we can see
Okay.
the screen now.
All right.
Okay, so I think with the screen, we are
It went
good.
off again. So it's gone off again. Okay. Stop again.
Okay, Dorcas, you assist that, and though I will prompting you so that we can easily move at the same pace. So, good evening, everyone.
Good evening, sir.
Good evening, sir. Good evening, sir.
Okay, for want of time, I will do a brief intro, and I will just ask some questions that will give me an idea of the structure of the profile of the class we have. Okay, so my name is Uzwazo Ikelebwe, a fellow of the Chartered Institute of Accountants. I want to say that with some element of pride. And I'm also a fellow of the Chartered Institute of Finance and Control. I manage a real estate company right now, and I have a background in hospitality management after managing some facilities in Lagos, in Asaba, and kickstart the one in Abuja. So that's my brief profile. And we're going to be doing the financial management and leadership in hotel management. That's the discourse we'll be having. So let me just ask these questions. Do we have hotel managers in the class?
Yes, sir.
Okay, like the GM or um, the front desk manager or the F&B manager. Do we have that group such in the class? I will be needing responses so that we can run a little fast.
If I may speak, not everyone is here. So I think amongst the 30-something people that are in the group, there should be 1, 2, or 3 of them, but not everybody is like present in this meeting right now. So probably that's why you're not getting any response so far.
Oh, okay. No, but at least among us that are here, we have those who are already hotel staff among us, right? Do we have F&B staff? Do we have bar as F&B? Do we have front desks? Do we have accounts or admin? Do we have marketers? Any
There's an
response?
account staff. There's an account staff.
Oh, okay. Okay, that's good. So do we oh, great. Do we have those who are prospecting to work in the hotel industry?
Yes, I
Yes.
am. And yes,
Yes.
I'm looking to go into the hospitality industry, and that's why I'm getting all the certification and training I need to do that. That's why I'm here.
Okay, that's
Okay.
good.
Likewise here with me.
Okay. Okay, so the last question that we asked, do we have anyone who is intending to invest into hotel? So is an entrepreneur, but he has not started, and is in this class.
Yes, of course.
Okay. Okay. So I'm talking to hotel staff, and I'm talking to some management staff in the hotel business, talking to those who want to go into or work in the hotel, in the hospitality industry, and also talking to those who are investors, who are entrepreneurs. So with this, I will try as much as possible to cut across so that we will not be too professional. We will also not be too down below. So, but my aim is to achieve understanding and how finance and leadership put together can lead to success and sustainable hotel business. Okay, the objective of this class is for all participants to understand financial management and appreciate financial planning skills, also appreciate financial performance as a measure of business growth. We also try to push the understanding of financial reports. And we also see the interplay of leadership and business success. Are you still seeing the slides? We are now in slide 3. Is Madam Dorcas with us?
No slide is showing up.
Oh, I don't know why I can't share it from here. Madam Dorcas, please, we need you.
Okay, my screen is not visible.
No. It went off.
Okay, let me do it again.
Why is bringing that? We are on that slide.
Okay.
Objective.
Okay, we are on 3, right?
Yes, we are on objective.
We are seeing it now.
Yeah, we just went through the objectives. Within this class, you should understand financial skills. You should appreciate the financial management as a tool to measure our growth, and have an appreciation of the financial reports, and see how the business can be sustainable and just can you mute our device. Doctor, can we get the person who is on to mute?
Please, can we mute our mic? Jamiu, please mute your mic. Jamiu. Thank you.
So,
You say?
Jamiu, please mute your mic.
Okay. Can we make progress? Just for overview, we know hotel is about providing hospitality services. That's grammar. But bringing it down, we are providing comfort. Hospitality service goes circles around comfort and satisfaction, and this revolve around accommodation, food, and beverage. like the front and also provide event, manage events. So all this is the hotel, all what the hotel business is about. I will not try to be academic so that I will begin to define with some, very fine grammar what hotel business is. Let's be practical. Where we have we have all these 3-star hotels, and they have restaurants. Then you have bush bar where um, there's language they use slang where you can sit out in the evening and do chill. The way are they still using that slang this time? This point and kill joints. Hello?
Yes, of course.
Oh, okay.
Which
Yes.
slangs? They are still using.
This
They are still
they say
using.
Yeah, the point and kill for the barbecue fish. Point and kill. They
yes,
still make use of it.
yeah, they still make use of that. So those are hotel services, restaurant services in the streets. And even some hotels they have this bush bar where you can do those, where you can enjoy such services. All of that is this hotel business. So whichever facet, either the hotel business as a whole, or the restaurant, or the point and kill stuff, is that's what they are doing. Everything has to do with money. So that brings us to the meat core of this course: financial management. Finance is money. Money is called currency. And I discovered the reason why it is currency is because it flows. All we are doing in business is how do we attract money to flow into the business, and how do we, manage the money that is in the business so that we will have some leftovers. So that, in its simplest form, is financial management. So in the slides, we're going to share the slides later. So don't feel too bad if you are not seeing the slides. We're going to circulate it. I will forward it. I will be able to circulate that. So let's just try to understand, though visuals help. So I said here that, simply put, financial management is managing finance of a person or an organization, and in this case, for this course, a hotel. So it involves planning, it involves directing, it involves controlling and evaluating the use of money in the hotel business. The operating word here is use of money. And the core object of every business is profitability. But that's the capitalist thinking. Now sustainability and growth is added. That every business is not just going to make profit, but the business has to be sustained. Accounting is designed for businesses in such a way that the business is assumed to have to be continuous. So in accounting, we have the continuity concept. Okay, so that is what has been stretched into sustainability. So when we manage our monies in the business, we have to have at the back of our mind that this business has to continue, and the services will be sustained. And in doing that, the business should grow. So breaking down the financial, why do we really do this financial management? All this controlling, evaluating, what is the end target? First is to sustain the profit. Then we want to maintain a seamless operation. Then we have to have at the back of our mind that there will be crises, there are down times in business. So our financial management should be able to enable the business manage unexpected crisis. And the fourth one I pointed out here is that the financial management model, however you design it, it should be able to support business success and growth. So we're going to take some parts, the key parts of financial management. One of them is financial planning. Planning involves trying to, look at set goals and designing programs and actions to achieve that goal. So when it has to do with finance, financial planning is captured in one word: budget. And budgets will also be expounded into cash flow projections. It's also as part of planning, financial planning. Then the end part of the planning action process is reviews and controls. So these are financial planning tools. So what is budget, and how will budget assist? After all, it's business, so we just cook or get our rooms ready. People come, they pay, they stay, and they go. But that's crude approach. So in hotel business, you have to plan and anticipate what revenue you need to generate. So if you have a hotel room capacity of 50 and each room is 100,000, for instance, so for 50 rooms, that's 5 million. But if it's a low profile hotel, so you're giving your room out for 10,000. So if all the rooms are booked every night, you are going to rake in 500,000. But you know that because you have 50-room hotel doesn't mean that the whole rooms will be booked. So you now begin to plan what is the average room rate occupancy I will have. To do this, you will look back and see last week, what was our performance? And you now project into this week. So that's sitting down and having this thinking, converting it in, putting figures to the thinking and putting them down is budgeting. So budget has two legs: the revenue budget, that is the anticipated income. Then you also have the expenditure budget, the expected expenses you are going to make. Some of the expenses are fixed. Some of them are the ones you can negotiate. So you begin to reason around those ones you can negotiate. So when you put these things down and total all the projected income, which in accounting they call cash inflows, then you try to estimate your expenses and sum it up. You will have a balance. So if at the end of the day you have planned that you will generate 1 million in this month and you will spend 800,000 in this month, it means you are expected to make a profit, a budgeted profit of 200,000. You may ask, what is the essence of putting this down? The design of hotel, the structure of hotel income is the room earnings, the drinks you sell, the food you sell, and if you have a spa or you have other outdoor or comfort services, you also anticipate what will be generated. Now, remember, these are planned figures. So in accounting, we call it budgetary estimates. They are estimated figures. Okay. So the second part of the budget is going to be your operating expenses. For the hotel, there are two key operating expenses: labor and the maintenance. Labor and maintenance. Why is maintenance key? Maintenance is key because that is what guarantees the comfort level of the clients or guests that will come. Hotel business is not off-the-shelf business. Yes, the drinks, you can just pick them from the fridge. The food it can be preserved, you just microwave and serve. But what you are selling is not really the drink, it's not really the food. What the guest is paying for is satisfaction, the comfort and satisfaction. And two things provide that comfort. One, the ambience. Two, the people. So that's why labor is key, because this is machine serving people It doesn't really, it's not like humans serving people. Then the ambience is just a feel. So this satisfaction is not tangible. It's not like computer you just pick and start pressing, or you just pick an item from the market. So that's why these two are the key um, um, operating expenditures. Then there is a third leg, which is capital expenditure that you do. This one has some capital nature, either you want to upgrade the assets of the hotel, or you want to remodel, you want to buy a new some new assets. So you have to plan it and put it in your budget. Okay, now we know what budget is. That is financial estimates of your income and expenditure over a period. This easily puts the money that comes in and the money you want to give or pay out. Now, there is this understanding that we need to have as a skill when planning your budget. Put the first, after planning the budget, this budget becomes, is like a guide. It becomes an instrument that will guide the operations. It becomes, a document that you will use to measure what the effectiveness of your planning. So the approach to, after planning and getting at your budget, the next stage of the budget is implementing the budget. That word is more used in the government circle, but in business is the same. Here, it is not like the implementing in the government sector where you just draw money and go and use. Here, it becomes the guide. So for all the revenue estimates, once this budget comes out, the sales team, your marketers, it becomes a target. So they have to drive that target. So they need to strive hard to meet those revenue estimates. For expenditures, this is more of those cost centers, the accountants, that's the admin guys, those in the kitchen, the storekeeper, the store guy. They don't generate money, they will spend it. But budget will help them to, it will help management to instill that discipline to have savings in every expenditure. So if you estimate that you are going to use 100,000 to effect repairs on a room that is reported, defective, you want to fix the bed, you want to fix some of the stuff, get one good flower, you want to change some stuff in the room, and they give you a budget of 100,000. When you are now negotiating, or the guy that is going to negotiate with the vendor is expected to make savings. So instead of spending 100,000, you should be able to achieve that with at most 80,000. When you do that, then you are making progress. The approach for capital expenditures is you obtain approval and make sure you do not exceed the approved limits. Now, here we have working capital items. Let me break that down a little. Working capital is the current assets and current liabilities. Okay, I can break that down a little more. Those inventories, the things you buy, like the F&B, all the drinks you buy, and then those in kitchen, all the kitchen supplies, then the room, the consumables, all these things, they are inventories. Then people companies might send people to you, but they won't pay immediately. You have to invoice after 1 week. Some companies pay after 30 days. That's debt management. Then your vendors, you buy some stuff on credit and all of that. So you also plan how you settle them. Okay, so when you do your budget, these people will be, taken into consideration. But the part of financial planning that takes this into consideration is called cash flow. Are you with me? Hello, I want to be sure you guys are with me.
Yeah. We are following.
Okay, so I'm gradually sliding from budgets into cash flow. So cash flow projections. Why the budget measures articulate income estimates and expenditure estimates. The cash flow, go beyond revenue and expenditures. Cash flow captures the totality of cash expectations. Cash flow projection captures the totality of cash expectations, the inflows, where will money come from. Majorly, money of the hotel will come from the guests that patronizes you. Apart from that, these guests, some of them will not pay immediately. So budget will capture the total sales or total room sales, both the one paid for and not paid for. But cash flow will capture what the part of these sales that is being paid and received. The cash flow will also articulate the receivables, that is, these people that clients or guests, company, corporate guests that we don't pay on time on checkout. What is the plan? How do they pay? If the policy is 30 days, how much of those who are owing are due in this month? So if you have corporate guests owing you 2 million as a last month, and your policy, your credit policy is 30 days, these, out of these 2 million, some of them check out on the 10th day, some checked out on the 15th day, some checked out on the 25th day. So the days they checked out, we create a spread of when their payments will be due. So you use that spread of when the payments will be due to anticipate monies that should come in that month from these people. And where there is need for investment and directors are expected to put in money, you also capture that in the cash flow. So I'm laying this understanding that cash flows do projections go beyond just sales and expenditures that we have in the budget. What will this do? It will help you to plan your obligations. Your outflows are your obligations. For instance, payment of salary is key because hotel business is a people-oriented business. A satisfied and motivated staff will not wear a plastic smile. He's going to wear a smile that is infectious. A smile that communicates comfort and leisure. So you take good care of your guys. So you want to make sure that you don't sell everything on credit and you will not have money to pay your staff. Then your vendors are key. You should be able to just place a call when your F&B say, look, our stout is going down, these our spirits are going down. I say, okay, what are your needs? He gives you his reorder, his reorder budget, and you should be able to place a call on your vendor that you need this and that, and that purchase order either by phone, by a phone call, by text message, or by smart contract, or you issue the purchase order on paper. Once your vendor gets it, he should trust you enough to make the supply, and that trust can only be developed from your consistency in meeting your obligations. So for cash flows, for the cash flow projections, you articulate inflows and appraise your outflow obligations. And your outflows include your payables, your operating expenses, your capital expenses, and remittances. For instance, you are supposed to remit VAT every month. You are supposed to remit your there are some states have this occupancy tax that they levy on hotels. Okay, so you need to meet those stuff up. Now, the key advantage of your cash flow projections is to enable you know when there will be shortfalls so that you plan for them. So when you analyze your cash flow and you see that some companies they spread it for 3 months. So when you do your cash flow for 3 months, you will know that the next month I will not have enough cash to pay my vendors, my suppliers. And you will know how much deficit that or shortfall you will have. That's where you will now apply to banks for bank overdrafts. So we use short-term credit facilities to fund working capital, to fund your cash flow shortfalls. There the flip side of it is that there are some months which is like the boom period where you have a lot of bookings, like when you're going to have a lot of influx into Abuja before October 1st. There are going to be a lot of activities. Then this third, fourth quarter, there are a lot of conferences that are planned. Once you on those periods, you are going to operate full occupancy consistently for a while. And when you have such, you are going to get cash surpluses. So when you have cash surplus, your cash flow surpluses does not translate to income. So you don't get that and you just start spending. So your cash flow tool will enable you to plan for the surplus, put them in short-term investments like treasury bills, fixed deposit, or you want to do a target savings where you have a project, maybe you are planning to remodel your restaurant, and you can say by next year or the next 6 months, I want to remodel my restaurant, and you begin to save towards that. Is an irony to learn from enterprises, entrepreneurs, and some corporate organizations that they don't do savings. That's not true. So when you get in and you are working and your account staff is bringing up these plans, because you've gone through this training, you will appreciate what is trying to achieve. The third part of planning is review and control. Okay, whether it's budget or it's cash flow, there is need for you to review these plans after a while. So planning is for its period. So if your budget is for the week, usually we plan for the year, then you break it down to the months and use the annual budget to plan the month budgets. Okay, so the objective is for you to exceed revenue and to always make savings in your expenses. For cash flow, the objective is for you to ensure smooth operation, that you always have cash either in bank or at hand to meet your business obligations. So you must look back to see how do you fare. So the records you bring out, they call them actuals. So if you've planned that you have 80% room occupancy for the month and you have 50 rooms, 80% for 50 rooms, as you are having 40 rooms taken consistently on the average. So if you plan for 30 days, so 50 times 30 will give you an amount. Then you multiply by the room rate and multiply by the percentage. That will give you the expected inflow, that's room sales you budget to get. Can we do that just like a quick class work? So a 50-room capacity hotel is budgeting that they will have 80% room occupancy for a month. So the question is, and a room per day is 10,000. So the question is, what is the expected room sales? for 30 days.
A room of a hotel of 50 rooms, please.
Yes, the hotel is 50 rooms.
Okay. And expected occupancy, please.
No, 50 rooms, with 20,000
Room
a
rate.
day. Yes.
Yeah.
Okay, so in a month of 30 days, if the projection is 80% occupancy, how much income you're expecting?
50% of 50. Okay.
It's 24 million.
Good.
80%.
24 million.
Yeah.
Okay. So if the average income revenue generated from F&B the previous month, they generated an average of 500,000 every weekend. And for the 5 weekdays, they do 100,000. So for 4 weekends and 5 weeks, 4 weeks, this month they want to increase that revenue by 20%. What would be the revenue?
Please kindly repeat the question.
Get you.
Okay,
get
I
the question.
said the F&B as the bar, they do 500,000 every weekend. Okay. And for the week, Monday to Friday, they do 100,000. So total per week is 600,000. Okay. So that was what they got last month. But this
Excuse me, please. Sorry
this
to
month,
interrupt.
okay,
Your question is every weekend they get 500,000. During
yes,
the week, they get 100,000 per day, and they have 5 days.
yes, not per day, for the 5 days.
For the 5 days.
Yeah.
Okay, now I get your question.
Yeah. So now we are saying we want them to work more, and you are saying that look, F&B, you need to increase, you need to sell. I want to increase your income by 30% this month. What would be the projected income?
By 30%. Okay.
Per week is 780,000 by 30%.
What do you have?
I said per week is 780, 780,000 naira.
Okay, yeah, now, because I heard 750, I was wondering.
780. A week is 780.
So for the month, that would be what?
Okay. Coming.
Oh man, this is 8 o'clock already.
3 points. Okay.
No, 3,120,000.
Perfect. Okay, so what we just did, we just tried to create the budget for the month on these income lines. So you don't just write from your head, okay, this is what I'm going to get. You have to do some of these computations so that you can articulate. That's why I use the word articulate, right? So if at the end of the month, this new month now, you now see, okay, okay, did we plan the one for room? Okay, we say the room rate is 80% capacity occupancy. So when you sum this one up, you now have your total income budget of 27.6. Then you now begin to plan your expenditures. You take the salaries. Did they hire any person? No. Do you need to hire someone? You take all those things into consideration. At the end of the day, the following month, before you start planning the following month, you need to take the actual. So when you sum up your income for the month, did it meet 24 million? It's possible that your income for the month was 20 million. So this is where we appraise. We call it budgetary appraisal, where you now get your performance. So you take the actual and see what is the percentage of this budgeted or estimates. How much of it were you able to get? So if we had 20 million instead of 24 million, which means we didn't get the 80% occupancy, but 20 million is 83% of 24 million. So you need to commend your sales team for getting to this. Okay, but the next question you will now ask, why did we not meet up? When you that period, this time when you are asking these questions, taking your actuals, comparing the actual with your budget or estimate, then asking, that will give you the variance. Then you now begin to ask questions, why that variance? When you understand the reason for the variance, what you have done, you have generated a tool for planning the next month. You have generated the what to work on or what to discourage. So it is in this time, it is this work, this part of financial management that assists business growth. So the figures, they will speak to you. Accounting, when you look at the figures, they will tell you the story. So you identify the variance, try and understand what is responsible for that variance. And the third thing in this planning process is to devise strategy to improve the revenue, then strategies or control measures to curb expenditures and disbursement excesses. There are some expenditures you need to make, which you may make your budget to make you to exceed your budgeted expenditure, which will, on the face of it, will look like a budgetary indiscipline. You budgeted 1 million for HRO cost, but you got this karaoke lady, and you say, look, if I get this lady, this 500,000 I'm making every weekend, I can shoot it to 1 million. And you got this cute lady to come and do karaoke. You are paying the lady 100,000 every weekend that she does that, and your income is shooting from 500,000 a weekend to 1 million every weekend. I don't think that's a bad idea. Are you with me?
Yeah.
Okay, so
Yes, I will.
this is the platform where all this thinking, planning take place. So the reviews and the controls make you make adjustments and articulate your next budget estimate. Okay, another aspect of financial management is financial performance. Financial performance are over a specific period, and they are used to compare and plan. So this time we're not talking about budgets. We're not talking about cash flow. Here we do comparison, we do appraisals of our cash flows, we do appraisals of our budgets. But now we want to see the index that make up your business line items. So if over a month you have 80% room occupancy rate, that's good. But if the next month it fell down to 40%, you need to query why this nosedive of your occupancy rate. So picking these evaluation metrics to evaluate the performance of your hotel is what we call performance, financial performance, and they are mostly done in ratios. If it's for investment, we have a return on capital, return on you guys know ROI, right?
Yeah.
Return on investment. Then we have NRR, net all those appraisals, investment appraisals, and all those whatever in banking they will do the risk. They have liquidity ratios. They have yes, we have these facility performances. They have
That's it.
they have their ratios, the prudential guidelines, the portfolios that are at risk. They evaluate the the risk, because for bank and the financial sector, they are trading commodity is money and is risky. But business, in hotel business, what we trade is comfort. So how do we appraise our comfort levels? One of them is the patronage you get. So the patronage of your rooms is evaluated. We have the revenue per room. We also have occupancy ratios. We have the average daily rates. Then you also evaluate your F&Bs. Find the device measures to evaluate your events and outdoor services. So let's reduce these to figures. and what is the importance of having these ratios. If you have 50 room capacity hotel, it does not necessarily mean that the 50 rooms will be available every day. If it's a new hotel, the rooms should be available for the first 3 years. And definitely you will now have reasons for maintenance, and because of maintenance, some rooms may be short and all of that. So you take the rooms that are valuable every day, and what income are you getting from those rooms? That puts pressure on this sale. So you have room to sell. So if you have 50 rooms available in a night and each room is 20,000 per night, it means you are supposed to make 1 million. Is that 1 million?
Yeah.
50 times 20, yeah. You are supposed
So
to
that's about
generate 1 million.
1 million.
Yeah, generate 1 million that night.
Yeah.
But if this night only 20 rooms were occupied, that means you are generating only 400,000 that night. But you know, because this is business, there are cases where you will give complimentary rooms. There are cases where there will be discounts. There are cases where, you know, the maybe the guy, lodging by 1 a.m. and is negotiating that, look, I'm going to check out by 8 a.m. at most. So please give me half instead of let me pay half. I'm in this terrible situation. All those kind of negotiations, wherever will come. So the money you make from the room will not be absolute 20,000 per room. So here, this is where this rate becomes important. So if it's 20 rooms, it means we are supposed to get 400,000. But instead of getting 400,000, 20 rooms were occupied, and what is in there is 300,000. So how much did they get per room? How much is the revenue per room? Can you solve that out for me?
Repeat.
50 rooms are available.
Yeah. No problem. Yeah.
But 20 rooms were occupied.
Okay. It's 400,000.
And we're supposed to give us 400,000.
Yeah.
But instead of 400,000, what they reported in accounts is 300,000.
Yeah.
So what is the room revenue per room?
That's 300,000 divided by 20. It's approximately 15,000 now. That should be 15,000.
Final answer? Another answer, please.
Sorry, please, can I get the question again?
50 rooms are available for this night. 20 rooms were occupied. Amount reported in accounts is 300,000. What is the revenue generated per room? As revenue
That's
per
15,000.
yeah.
That's 15,000.
15,000.
Yeah.
That's 15,000. 15,000.
Okay. I don't agree.
Okay.
Let me put the question again. The room rate is 20,000.
Yeah.
We have our hotel capacity is 50.
50, yeah.
So expected sales for full occupancy is 1 million. But on this day, 20 rooms were occupied, and the room, which ordinarily ought to give us 20 rooms were occupied. What we expect is supposed to be 400,000.
Yes.
But instead of getting 400,
400,000, yes.
what was reported
It's
is
300.
300.
300.
What was paid or what was collected in total is 300,000. So the question
Yeah.
is, what is the revenue rate per room? Is the RevPAR, which is the appraisal or the performance ratio, is called revenue per room available. RevPAR, revenue per room available.
Available. Yeah.
Yeah, the RevPAR for this will be what?
It's 15,000.
15,000.
Yeah, because the room sold was 20 rooms.
Do we all agree that it's 15,000?
It's 15,000.
Okay, so
As if it
this
was
week,
rented at if it wasn't rented at the if it wasn't rented at the initial
no, so
fixed price of 20,000.
some of them paid
So,
20,
so we
some
are
of
still,
them
it's not fair, so we are still
paid
because of
10,
discount,
but
or
all
I
that
don't understand. Early checkout, a lot of things can cause that.
Yeah. Okay, so I said I didn't agree with that, right?
Yeah.
Yes.
So let's see the
Because
argument.
yes, because the ratio is revenue per room available. The room available for sale
Okay.
was
The room available to
the
okay,
room
okay, now I
that
get it.
was, yeah, the room that was
You
sold.
didn't put the question like that now. You should tell us
No,
the average revenue based on room available.
no. What this
You
does
said what was
is,
the average room set?
yes, because the examiner will always want to twist things to confuse you. That's why it's exam.
No,
So
it's ratio. Now, what's involved ratio? So we need to be direct. Ratio that's small is the small difference.
my explanation was very direct. I wanted you to deduct it when I said revenue per room available. So the room available was 50. So in this case, the room rate, the revenue available rate per room is 6,000.
Yeah, if we go based on the room available room, not on
Yes.
room sold.
Okay.
Yeah, that's correct.
So
It was on available rooms.
yes. Now, what's the implication of this is that what are you guys doing? I have 50 rooms for you to sell. Why did you sell only 20? So right now the loss, the revenue loss is 700,000. The
Yeah.
second implication is with this low occupancy, you are still giving discounts, and you are not able to. This 20 rooms is supposed to give me 400,000. Why is it giving me only 300? So now we are not talking like a staff. We are talking as like a management staff. You are speaking like the owner. You are thinking like the owner. One thing secret of growth for employee is to transform his mind from thinking as an employee to think like an employer. So that's 15,000 we computed is the ratio called average daily
Sales.
Yes. So if you do that for a week, then you have average daily sales for that week. So you just take the number of rooms, the total amount that was collected or sold over the total rooms that was sold. For the one for RevPAR, it will be total revenue over number of rooms available. Occupancy rate is easy. It's percentage of available rooms occupied. So for this, our illustration, we have 50 rooms, but 20 rooms were occupied. So what is the occupancy ratio? Did you get that?
Okay, that's as a
Yes.
As a question.
As a question, 50 rooms are available. 20 rooms were occupied. What is the occupancy ratio?
Ratio. That's about 5:2.
What's the percentage of rooms that were occupied?
25%.
What?
No, that should 25% occupancy.
I don't know
So
whether
20.
that.
Sorry.
Is it 40% ratio?
This is this.
It's 40% ratio.
Yeah,
Yes,
40%.
It's 40% ratio.
40%, please.
but 25 rooms will be 50%, right? So if your staff
Yes,
are coming,
25 rooms will be 50%.
if staff are
Yes,
coming,
40% ratio.
yes, if staff is coming to pressure you for one welfare or the other, it's easy to manage and say, look, man, your occupancy ratio is so low. So why are you not saying why are you coming to this? So it will help your planning. Okay, so that's easy. So these are some of
ratio.
what? What did you say? I didn't get the question.
I don't think he was asking a question, sir.
Oh, okay. So the other one is F&B. This is practically trading. So the total drinks you bought, how much did you sell them? You do that computation so you know the profits you are making. So in business, we either have gross profit or you have a net profit. So, but this one we can use, you normally use the word margin. This, they use the word margin because this is a contribution to the total profit of the hotel at the end of the month. So you want to know what is the kitchen and the bar, what are they contributing? So if you just do only the revenue and the goods, the items that were bought, what you have is a gross profit margin. But if you factor the FRB staff and some other overheads like the all the complementaries that you give, in some of the wastages in the kitchen that you sum up together, what you will have would be a net profit margin. So when your employer is talking, wants you to increase these margins, you know what he's talking about. So how do you increase them? You try to push for more sales, reduce complementaries. How do you reduce complementary? That can only be done when your service is top notch. So there are no service defects. Then you also manage your labor and don't overwork your staff, but see that they are optimally employed, doing their best and generating the much that they can. So the other understanding I want to push in financial management is a preview on business financial statements. This I listed 3 here: the cash flow statement, the income statement, and the balance sheet. Except you are at the top management staff, you may not see these statements, but you need to know them. And those that are investing into this, into hotels, your external accountants or your account staff will produce these statements for you, and you need to analyze. You need to understand the analysis that will come out of them. So for cash flow, it analyzes how monies have moved. It will take this money you have last month, okay, and analyze your accounting reports to identify the monies that came in this month. So if you had cash of 1 million last month in your bank account, and this month, from this our illustration, you were able to generate 20 million from room sales, and maybe all together is about 20. You're able to generate 25 million. At the end of the month, you don't have 26 million. So cash flow statement will now begin to analyze, apart from sales, which other areas did you get money from? So, and it sums them up. Then you will now begin to trace, where did this money flow to? Which aspect of the business did you spend this money? You will now analyze the outflows. Then these workings, at the end of the day, is going to work to get your cash balance or bank balance at the end of the month. So if at the end of this month, you generated 25 million plus the 1 million of last month, so you have 26 million, and you have only 250,000 in your bank at the end of the month, the question is, where did all this money go? So it is cash flow statement that answers that question. So it will take, for instance, your vendors. If the vendor at the beginning of the month and the one at the end of this month. So we appraise the changes and movements of money, changes in these items and movement of money. That's what cash flow does, cash flow statements. So they sum them into three: the operating activities, investment activities, and financial activities. These are the three core activities of business. Anyone outside of this is not the business activity. For instance, if you are the hotel owner and you have your wife is giving you so much pressure, and he wants to go on holidays with your two kids, and you send them to Dubai, or Turkey, that is not a business activity. So the cash flow will not be able to capture it. So at the end of the day, it will pick it out and tell you that this your cash balance is not balancing. Why? Because 2 million was spent on that trip.
Hello, sir. Hello. Looks like you're having a network bridge.
Yes,
Hello.
Yes,
sorry,
I think the network is affected.
I
Okay.
needed
All
to.
right. Welcome back, sir.
Hello.
Hello, thank you. Are we
Okay.
together?
Okay. Yeah. Back.
I
Okay.
think
Yeah.
I
Yeah. I
think
think we're back.
this call that came was good because at least it's prompting us to know if you guys are still there or you have dodged into the kitchen to do some eating. For,
It's
for
Lessons
those,
97.
Yeah, here,
Some days
right
are
here.
like that.
no,
Correct.
the guys
So you are
mentioned that.
doing analysis of the trip.
Yes, but for the ladies that are with us, their guys or their husband must have been, hey, which kind of class are you? You will not finish the class. Come on, give me my food. They will not dodge and just go and dish and come back. And so thank God all of us are here. Are we together?
The money for the sea is part of cash flow now.
Yes, we are here.
Yeah.
Okay, so that's the beauty of cash flow statement. Then the income statement, you know, we analyze your revenue, takes down your expenditures, and get a profit. It will also, that statement will also see how that profit is distributed. Which part of it are you putting back into the business? Which part of it are you taking? And all of that. The obonge of all of them is the balance sheet. The balance sheet will tell the health of the company, whether the hotel is healthy or not. If it's not, when you go into a hotel and do review, physically, you will know whether the hotel is healthy or not. The paint is not, doesn't show whether it's healthy. But when you enter the rooms and you see that the beds are shaking, or there are some cracks on the wall, some of the furnitures are peeling, you know that the hotel is not healthy. But the accountant may not need to enter the hotel before he knows whether it's healthy or not. From the balance sheets, he will know whether the hotel has small legs and is carrying big, heavy load. You know those, have you seen, okay, what's this cartoon where they will have small leg and the guy will have wide chest. You know the name of that guy?
Spider-Man.
Is it Johnny Bravo?
Yes,
Johnny
very,
Bravo.
very funny. Yeah, Johnny Bravo, you know. So their businesses, their hotels make when you look at it, and if you say Johnny Bravo Hotel, the balance sheet will tell you where the assets are small, but the liabilities are very huge. The equity is also small. Then at times the assets may not be small, but they will be weak. So if you analyze the balance sheet, you will know if the assets are weak. You know, also if the business is suffocating, like where the man have used the hotel to borrow money, but instead of spending the money on the hotel, they want to spend the money on election, on politics. At the end of the day, the hotel will be suffering. So it measures the health. These three financial statements, they will measure the health. They will summarize the performance of the hotel for its owners, also for government, so that government will know what tax they can place on the hotel. And stakeholders. Stakeholders include staff, include vendors, creditors, include even the corporate customers or corporate guests, and the public for review. So this is quite an overview of financial management. The end report is to bring out a healthy business financials. Your cash flow should be healthy. If you manage your finances well, your profits will be looking good, will be looking green and good. If you manage your finances well, and at the end of the day, all the stakeholders will be happy. The owners will have a lot of profits and beat their chest that their business is growing. Government will tax the hotel and the hotel can pay. Then creditors will be happy to extend more credit to you because your balance sheet is looking good. So the balance sheet has three items, three classes of items: the assets, the liabilities, and the equity. In simplest form, what the hotel have, who the hotel is owing, and what the owners have in the hotel. So that's financial management. Any question? Do you have any question on this? I have like 7 minutes more because it's supposed to be 2 hours, and so this last slide we run it through. Or do you want me to run it through before we ask our questions? Because we have like 10 minutes for questions or thereabout.
Okay, go ahead. You can go ahead, sir.
Right.
Okay, so there are two group of leaders in the business: the owners and the managers. Leadership will provide the vision. They will set the goals. They will plan and bring out strategy and try to convert this strategy to actions that can be taken. Then they will also have to create relationships. All of this is to achieve guest service excellence. So the strata of leadership in a hotel starts from the owners. The owners may not be the ones running it. Where they are not the one running or managing the hotel, they will delegate that responsibility to the hotel managers. The hotel manager will have his team while they do daily or daily running of the place. They cannot be in everywhere at the same time. So there will be some leaders at other levels, like the F&B manager, the chef, the hotel manager, the admin, who we have the store guy under him, who we hire and maintain and all of that. So this is a structure of leadership in the hotel. What will make these people work towards achieving the service performance is team relationship. So leaders are expected to understand the job of their subordinates, and they also need to understand their subordinates, people they are working with. So you should have your set goals and lead the people to achieving that goals. In doing this, there are always frictions because humans are not machines. So there is a craving, the will I say the tool? I don't want to use the word tool. Well, I'll get the word on that. What is paramount is to have a relationship that we both support one another and support the business, because the hotel is an entity while you are an entity. So this relationship is both personal and interpersonal. So the major thing that moves people to work is motivation, and motivation is majorly dispensed by leadership. Whether you are the head of housekeeping, how you motivate your staff will make them work better. So from top to it's Buhari that said top to bottom, but from top down, that you are the bottom of the structure doesn't mean you are not a leader. You are an aspiring leader. So since you are aspiring, you need to have the attitude of supporting your superiors, because they will get the credits, they will get the glory, you won't get it. But you must pass through that process to get to the top, where people will also support you to get your glory. So the major thing you do is motivation. Fortunately, because we are humans, conflicts are inevitable. So there is need to develop conflict resolution skills and team spirit recoveries. Team spirit recoveries. And the major driver of this that you have to imbibe is truth and objectivity. Truth and objectivity. Be objective in your judgment and be truthful both to yourself and to your team members. Each one, you climb this leadership cadre or ladder by attitudes of honesty, firmness, and sacrifice. So those of you who are in leadership positions, or you have one or two persons working with you, you need to cultivate these leadership skills of motivating your staff and be truthful when you resolve conflicts and learn to recover team spirits. The implication of this is that you guys are going to, because let me put it this way, a satisfied, motivated, and happy hotel staff is most likely to satisfy your guests. So the one that is not satisfied is not motivated, is most likely to create service defects. So that's why leadership is very key in hotel business. Smile is infectious. Plastic smile is not. Frowning is annoying. Even a plastic frown is annoying. So, in conclusion, understanding financial management and its goals, its tools, and their contribution to business growth is strategic to the success of hotel business. Financial management is key to smooth operations and provision of excellent service, guest services. But these two put together, leadership is what brings them together, is what weave this stuff together and creating that strategy to achieving the goals of financial management. Thank you for your time and the opportunity to talk to you.
Thank you very much, sir. The question that somebody brought up when we wanted to start. So the question was, for someone that is new, you are not yet a manager and you're aspiring to be a manager. I know you have said some things about it just now, but maybe we'll just be somehow, just add more light on it. So you're aspiring to be a manager, and then probably how do you start? Let's say you just got the job. So how do you start? What are the things you need to put into consideration? I believe we have gotten a lot from the class already, but I don't know if you will still throw more light specifically on this. Thank you.
Okay. That's a practical question. It's a scenario where even if you jot the things that you need to do when you get to the office, even if you rehearse them or you resume, they will fly away from your head. You will be holding the paper when some of the stuff will happen. You hold the paper where you have this your key points, and you will be looking at it, or you will not see anything that you have used your own hand to write. So the first thing you should develop is self-confidence. Because that role you step into is a management role. It's what you have that you can give. And one major demand of management is that of leadership is that everybody in that small, no matter how close, they are looking up to you for direction and what and instructions on what to do. So it's not what you say, this is what you can do, this is what you cannot do. So what to expect will vary from organization to organization. The people you will meet will differ in their attitudes, reception, understanding of the job, and your approval or acceptance of you. So first thing from my experience is, how do you access the staff you are going to work with? And in doing that, how do you break the rejection wall that will be there? No matter the anointing, no matter the grace you carry, and no matter how likable you are, once you go to a new place, the response to change is resistance. Somebody was there before you came. So the default response to change is resistance. So you are going to be resisted. So how do you convert resistance to acceptance? So you must first of all put up that impression that they that are there that you have come to meet, they know the environment, they know the job, they know the guests, they know the leadership, the owners, and every other thing more than you. So that first disposition will break the wall of resistance. So when you now ship in your directives or opinions, they will not just see it as you making them to work, they will see it as you leading or trying to lift their standard or adding value to their work and the hotel. So once you can break that, then it becomes a smooth ride. The ride becomes a little smoother. So the second thing you must grasp fast enough is the workings. What is the state of that place? The office, the hotel, what is the what have you met? And the your takeaway from every interaction with the hotel and the people is trying to identify what to improve on. So when you come with a basket of fruits that we produce improvement, and you have the disposition of accepting these guys and wanting to work with them, then you can begin to maneuver the other things that they come. They will be the one to even help you to maneuver them. But if you go there and be the boss, then they will, from the default resistance, they begin to strategize how to show you that they know their job, how to show you that they know management, how to show you that they were here before you. So that's my response to that question.
Thank you very much, sir. I believe we've learned from it also. I can't remember who asked the question. I would love you to respond. I don't
Thank
know
you
if
very
you're
much.
still okay.
Thank you very much, sir. I was the one that asked the question. Peter Dan by name. Thank Thank you very much, sir.
Okay.
The lecture today is really inspiring, and to be frank, I'm both of
Thank you very much, sir. I love
Yeah,
the spirit.
Thank
you're
you.
welcome.
All right. Thank you very much, sir. Thanks for your time. We are grateful, sir. God bless you.
Yeah,
So we'll be going back
amen.
to WhatsApp class. Like I said, I'm going to drop the details on the project for us this night. Then those that have not created their groups, please do so and add me. I'll just be observing
Yeah,
and know those that are
I have a
contributing
question.
and those that are not. Yes, sir.
I thought I have a question based on the topic, and I don't know whether I'm permitted to ask.
Okay. Let's hear it.
Okay. Good evening once more. Yeah. My name is Anosike Jude. So yes, the explanations are clear, but I have a question. I have one or two questions to ask. One is on the cash flow statement mentioned about it. So I want to understand something because initially you define the cash flow as what comes in, that's the inflow, and the cash that moves out. So my question is that in they mentioned about the bank, the money remaining in the bank, and the cash that was actually expended. So I want to ask, in looking into the cash flow statement, do you also add up the payables and the receivables that we're expecting as part of the cash flow within that
That's your
cycle?
phone number.
Hello?
Hello. Okay. Let me quickly respond to this. Then I will ask that you permit we all other questions. You should send them to Madam Dorcas. You will send them to me. I will respond, and then she can forward to you guys because I need to
Okay.
move on. But for this one, you
Yeah.
recall I tried to differentiate. I started that cash flow projections is a planning tool. That one helps you to plan your cash, activities so that you can identify shortfalls or um, uh, surpluses and
Yeah.
work towards them. So if there is going to be a shortfall, you can begin to plan to get a facility to meet that. Then where there is you are articulate surplus, you know that this surplus is coming. I'm not going to spend it, or what do I do with it? Let me invest it on before where I think of what to do with it. So that's what cash flow projections can help you to do. But for cash flow statement is a statement that analyzes the movement and change in cash and business activities
Yeah.
over the period. So that's where you have that circle. So it will analyze the change, the monies generated from operating activities, your trading activities, and the purchases you made, then the sales you made, the monies that came in. Okay, so it will now it will analyze your you know um, your other trading activities, which include your vendors, the payments you made to the credits that you receive over the period, and the ones that you paid. Okay, so the change in your creditors that's um, that paid you. You analyze those ones too. Okay, so then investment activities, which assets did you buy in this period? Then how did you buy it? Did you use the business money or directors brought money to do that, to buy the asset. So it will analyze that sector of a section of activities. Then when it adds all the nets of these ones together, it has to give you the balance of cash that you have. So it's just analyzing movement of money that you have before, the one that's you added to it, then the one you paid out, and now what is left. So that's just the objective of cash flow statement. So in doing it, this class is to give us understanding. When we're going to practice, if we have to do that, that cash flow is projection and cash flow statement can take like maybe 1 or 2 weeks. Okay, I believe I've answered that question.
Okay.
So please permit me to attend to some pressing issues. God will bless you and reward
Thank
your
you.
effort.
You're welcome.
Thank you very much, everyone.
Thank you so much.
All right, if you have more questions, please, you can actually drop them in a group. The ones who answer will answer. The one that needs his attention, I will forward it to him. Then the response will be forwarded to the group also. All right, thank you very much, everyone. So I will send the details that we need to give us clarity in the WhatsApp group that's concerning the project. So probably I will allow us handle and rest. Then I will drop the test link. I will drop the exam link though, or probably I will drop it tomorrow.
Okay.
Okay. Yes, so that we can relax and maybe think about how to go about our projects, right? So that we can relax. Then tomorrow I will drop the exam link and every detail. So just do yours, and then you push to encourage each other to finish the project so that you can process all at the same time. Thank you very much, everyone, and God bless
Thank
you.
you.